Paramount Global shares are down about 4% today. Loop Capital downgraded it to sell on reports that Sherry Redstone is in talks to sell a controlling stake in National Amusements. That's Paramount's big parent company, saying it wouldn't have any upside for Para shareholders. And our next guest agrees. Let's bring in Barton Crockett, senior media analyst at Rosenblatt Securities, along with our own Julia Boorstin. Thank you both very much for being here. Barton, let's start with you on whether or not this type of a deal has any kind of legs and why investors would want to get in on this kind of action.
Well, look, I mean, to step back, we have a sell rating on Paramount that we've had for some time. And, that this is a volatile stock and very sensitive, obviously, right now to deal conversations. I do think that the issue with Paramount is that nearly all of their cash flow comes from their TV networks. The theory with Paramount is that you can grow enough cash flow from their streaming to offset the secular pressure on TV networks. And then you have meaningful value in the library, and you have a fair amount of debt. We put all these things together, and we think that the TV network business, buyers of that are a diminishing breed, and we don't think there's enough value in the library to really give you upside in the equity from here. All of this is kind of like unsourced kind of reporting. We don't know for sure what's going on. So I think on that alone, there's a certain grain of salt. But you look at the breakup value here, and there's a meaningful risk that if you wait too long, that the meaningful cash flow engine in TV, may not really be able to drive the value that you need to make the sum of the parts work, because that's a melting ice cube.
Yeah, I mean, I just have to weigh in here and share my reporting, which is that there have been talks. They have been very preliminary. We got a no comment from all the involved parties. But I do think it's worth pointing out why it would make sense for Sherry Redstone to consider selling her controlling stake in Paramount through National Amusements, and why that might make more sense, especially given the regulatory environment right now when it comes to completing a big deal. So this idea that is sort of a clever way to get control of Paramount by buying the National Amusement shares that have such powerful voting rights when it comes to Paramount. But I think at the end of the day, the issue here is that that while Paramount may be for sale, or while National Amusements shares may be sort of effectively in play now, thanks to these latest developments, that while we have value, a clear value in the library, we also have heard from a lot of people that there's interest in buying assets such as BET, as well as the studio, not to mention the beautiful studio lot, the historic Paramount lot, that there is a lot of concern about those more traditional linear assets that sort of comprise so much of Paramount's business, which, as Barton mentioned, are struggling with cord cutting as well as a weak ad market here. So a lot of different factors in play. But I would say that this is really the beginning of the next wave of M&A talk in the media space. We have Warner Brothers Discovery effectively coming into play in April. And I think it'll be interesting to see sort of what unique partnerships or maybe bundling happens given the regulatory environment.
That's a great point, Julia. Barton, if you look at the way things are going to shape up in 2024, it could be a wholesale change for the media landscape, given all the headlines that we've already gone through with regard to labor issues, artificial intelligence, and everything else. What exactly does consolidation then look like, and how far can it really go? The government can't allow just a handful of people to control pretty much all content on Hollywood, right?
Well, look, I think the government's hand is held in check by court precedent. I mean, obviously, we have an activist kind of antitrust environment right now, under Biden and frankly under Trump before him. But the courts haven't really, backed up a lot of their efforts to block consolidation in media. And that's because case law is not really supportive of it. I do think that the trend towards consolidation that makes economic sense is for the content, the sports rights to flow towards the big tech platforms. That, of course, raises the antitrust questions. But these platforms have great advantages in terms of their ability to monetize these assets differently. They have an ability to market through their installed base of devices. And ultimately, that looks like a winning hand over the long term.
Gotcha.
And, I think that's the future the media guys need to play for.